Last week, the market dropped 4%. Oil sank below $60 a barrel. Is this the beginning of the end? What's going on? And are there any opportunities to be had? Good morning. My name is Paul Carroll. I'm the principal and founder of Efficient Wealth Management, a boutique wealth management firm based here in the Woodlands, Texas. As we know, last week the market was down. Oil did sink below $60 a barrel. And of course, as always occurs in these events, there's a certain undercurrent of fear. What is going on? We talked about oil actually recently on the Price of Business. Oil is as much a symptom of a bigger global issue than the problem itself. Though, tell that to people in Houston. Of course, Houston market is very much, the economy here is very much affected by the price of oil. Airlines, of course, are loving it. They're having a field day. From the point of view of the stock market, the U.S. markets are mature. They're fully valued. The dollar is strong. Bond yields are at historical lows. There's a you're damned if you do and damned if you don't environment. You can go to bonds and make nothing, or you can stay in stocks and enjoy the ride. Partly because of the strength of the United States and their economy and their success in dealing with the disaster of 2008. And I don't mean that absolutely, but relative to other countries, it's been successful. Partly because of that, the dollar is very strong. And that means the normal diversification moves that make sense, have made sense, and will continue to make sense, have substantially underperformed in the recent history. Foreign markets, emerging markets, natural resources, high yield bonds have actually been okay the last year. International bonds, all these things have been affected by the strong dollar. Why is the dollar so strong? One reason is the success, as I discovered, and another is a concern of the risk of a Eurozone deflation. Now, most people don't really think about deflation as being a problem, but it's scary, and unless the Germans cut loose a little bit and allow the Eurozone to inflate their currency, there's a real risk of negative growth and negative price inflation across much of the Eurozone, and that's causing fear and more of a flight to the dollar. Are there opportunities? That's the good news. Yes. First and foremost, and this may sound like putting a lipstick on a pig, but tax loss harvesting is a great deal. When you manage a portfolio in a tax-efficient manner, asset classes that have taken a beating need to be harvested for their tax losses. We can come back in 60 days and rebuy in, or if we don't want to lose exposure to the class, then we can actually buy back in using something slightly different, enough different to meet the IRS requirements, but still close enough to keep the portfolio in balance. We're going to be doing that this week for our clients. Anyone who's got master limited partnerships, those things have been hammered. That's okay. There's still great yields, but there are also great tax loss harvesting opportunities. So again, we're going to be taking those opportunities and getting right back in early next year. Natural resources have taken a bit of a hammering this last few years. They're actually at 5-6 year lows. That again makes them a very high quality asset class for the long term, an opportunity for tax harvesting only to the extent that they're not in IRAs. And truthfully, for most people, they're going to be in IRAs because that's where they belong. They're tax inefficient investments. On the flip side, MLPs should not be in IRAs for two reasons. One, they're tax efficient investments. And second, an MLP can generate what's called unrelated business taxable income, and that can blow up an IRA. So if you have MLPs in an IRA, that's certainly a red flag. None of our clients have UBTI in their IRAs. So there's great opportunity going on. There's a little bit of fear. Remember, this is what we do. This is what an investment process is all about. And this is what you get paid for as investors. We're going to get through this. We're going to make more money next year. And in the meantime, I wish you the best of investment success. Thank you.